Shares of ARM Holdings jumping 25% in their Nasdaq debut. The chip design company, which is controlled by SoftBank, priced at $51 a share yesterday. Our next guest believes ARM could help jumpstart the appetite for IPOs. Rick Heitzmann is known for early investments in Pinterest, Airbnb, Shopify, and DraftKings. Rick is founder and partner at Firstmark Capital. Rick, always great to see you.
Oh, thanks for having me back. It's fantastic.
To the new set.
Old home week. Yeah, it's awesome.
In terms of today's debut, what do you make of it? And we had a guest yesterday saying that he thinks it's going to be like Uber, where the high will have been hit basically at the IPO, and then it'll sort of just languish for a long time.
I would disagree with that.
Okay.
I think what you're seeing is that there's real fundamental demand for IPOs, and people are looking for the new toy. There's not been an IPO, and this isn't even a real IPO. This is a relisting of a company SoftBank took public, similar to Kenvue, which was the J&J spinoff. So, you're going to, but this is what you're saying is there's fundamental demand for that. There's people who want to buy IPOs. And then you're going to see next week with Instacart and Kenvue that, that you're going to be able to buy real traditional fast growing IPOs as those guys come out. And there's a lot of appetite for that. And they're structuring the deals the right way.
So these are companies that have been around for a while, and their valuations have in fact been marked down from their peaks dramatically. So that sort of bodes well for them in their debut and in terms of pricing. And I'm wondering if you think that that's sort of what needed to happen.
They had to. They had to price for the pop. I mean, if ARM would have traded down today, the market would have felt a lot differently. So they price it the right way so they get a pop. And they also have a very small and limited float. So, therefore, they're constricting demand and pricing it the right way. And it's the reason that they're going to price, Instacart down 70% from the last private round. They're pricing it to get into a good new normal for an upswing.
So it's interesting, Rick, back in 2021 when Instacart, again, was all the rage, all these gig economy, delivery economy, this was it. And now, so like you said, it's going to be down 70%. When you think about this, you're a real early stage investor, but some of the investors, some of the VCs who bought at that $39 billion valuation, I mean, it's going to hurt, right? And then the other thing, I'm just curious if you can give us a sense, who is the incremental buyer of an Instacart here? Because so many different, sorts of companies, hedge funds, that normal people who would be buyers on IPOs, they've been participating in the secondary market. They were buying, you know what I mean, in some of these growth rounds. Is that a different dynamic than in past IPO cycles?
Well, they have. They've bought, and some of them actually have already sold, and some of them haven't participated in this market for the last 2 years because they didn't want to participate at $38 billion. And now at $9 billion, it's interesting. And Instacart's doing the same thing that Amazon did, that some of the other folks are doing of, hey, we're getting in the advertising business. So they're selling very low margin products in order to advertise against them. And it's been a good model for supermarkets, been a good model for Amazon. I think it's going to be a pretty decent model for Instacart going forward.
Congratulations to the NASDAQ. They did a great job, without question. Wonderful. All right, let's talk about ARM real quick. They did $2.7 billion in revenue last year, about the same this year. I think today's close means $65 billion market cap-ish. Does that math make any sense?
The math does not necessarily make sense, but it's you think about the consistency of that business. I mean, that's so tied to the ecosystem of the cell phone infrastructure that's going to be around forever. And, whatever growth rate you put on that, I don't know enough about the company to talk about that. But you can say, hey, this is an incredibly important infrastructure company going forward, and therefore it should be priced at a premium for that reason.
In terms of market conditions that are going to be good for IPOs, for the new round coming out, I'm curious because, big cap tech, you could make the case that they are defensive.
Yes.
And so that's not necessarily the measure of a good market or good market conditions for these IPOs. They're very different animals, right? I mean,
it's very true. That's why people were very concerned that most of the rally has been around big cap tech. And where people had historically seen a market open is the last section of IPOs have rallied, right? All the IPOs from 21, if you would see them rallying just to show fundamental demand for growth tech.
Right.
And we have not seen that. So people are wondering how much appetite is there from the big traditional IPO buyers. And we're going to find out next week.